A good FriYay, everybody. It's your rate slayer, Buffy. Yep, that's me again, and I am back with the second episode of the July 2022 Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk. Yep, right here at SunWest Mortgage Company. Well, disappointing corporate earnings weighed on investor sentiments. However, price pressures, a wave of monetary tightening, and a slowing global economy continues to shadow markets. The second quarter earnings season got underway this week without providing much for investors to cheer about. Investors are taking cues from it on whether the economy is headed for a recession. Treasury yields climbed back and sent equity index futures convincingly back to negative territory. Futures and contracts also reported broad-based losses as concerns about China's COVID resurgence also weighed on investors' risk appetite. So, what else is under the surface? So a highly anticipated CPI report was released this week. Unexpectedly, U.S. inflation accelerated to 9.1% in June, the largest gain since the end of 1981. Economists projected an 8.8% increase. Moreover, the producer price index for final demand increased 11.3% from June of last year and 1.1% from the prior month. The reports underscored relentless price pressures that will keep the Fed on track for another big interest rate hike later this month. A combination of steep Fed hikes and economic growth fears have lifted the greenback to the highest levels since March 2020. Another hot currency, the Japanese yen, sank to a fresh 24-year low. However, Treasury Secretary Janet Yellen clearly denied any willingness by the U.S. to support a potential intervention into currency markets to halt the depreciation of the yen against the dollar. Crude prices are hovering around $100 a barrel. OPEC released its first oil market outlook for 2023 and expects the global oil demand growth to exceed the increase in supplies by 1 million barrels a day by next year. President Biden's coronavirus response team warned Americans of the renewed concerns of COVID-19 as another highly transmittable subvariant of the coronavirus fueled a new wave of infections, reinfections, and hospitalizations across the country. Applications for U.S. state unemployment insurance rose by 9,000 to 244,000, a highest level since November 2021 during the week ending July 9th. The rise in unemployment claims comes as more companies announce job cuts amid increasing fear of a U.S. recession. The Federal Reserve's interest rate hikes have already led to a steep climb in mortgage rates. That has started to cool home purchases demand, but likely pushed some potential buyers back into the already tight rental market where costs are soaring. On the same page, mortgage application activity declined last week. The MBA index declined 1.7% on a seasonally adjusted basis from 1 week earlier. Purchase index decreased 4% from 1 week earlier. Interestingly enough, the refinance index increased 2% from the previous week. So now let's see what else is happening around the globe. Disruptions to crop shipments from Ukraine, one of the world's biggest wheat exporters, has sent global food prices to record levels and raised worries about rising hunger. To contain this, Turkey hosted talks with Ukraine, Russia, and the United Nations on ways to resume grain exports from Black Sea ports blocked by Russian troops to ease pressure on global food markets. Meanwhile, finance ministers and central bank governors from the world's biggest economies, G20, are gathering under increasingly fragile global conditions for the Group of 20 meetings in Bali, Indonesia. Okay, let's wrap it up. The inversion between 2-year and 10-year yields, a potential recession indicator, is the deepest since 2000. Moreover, high U.S. inflation has hardened expectations for more aggressive Fed monetary tightening that could trigger a recession. Traders have shifted toward predictions of a historic 1 percentage point interest rate hike later this month after the U.S. consumer price gouge clocked a 9.1% annual climb. But now, the big question for markets is whether the latest U.S. inflation print marks the peak. Well, to answer this, we'll have to wait and see how the Fed's policy actions and supply chain outlook is going to impact the price pressures. So that's all we have for the week. Please join me again for more market updates, figures of various important economic data, updated status of geopolitical nervousness, and much more. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Happy Friday! Thanks, guys. Have a great weekend. Buffy, out.